the Corporate Transparency Act is. All right, let's dive into this. The Corporate Transparency Act, this law is the most critical law that has passed, like I said, in the last 20 years. Me as a lawyer, business and tax lawyer, help clients set up over 10,000 entities. The number one law that is affecting them more than anything, all those 10,000 clients over those years, the Corporate Transparency Act. And that is because you now have to file something to the federal government. Typically, when you set up an LLC or corporation, all you did is you file something with the state where you're setting up that entity, and you go get an EIN or a tax ID from the federal government. That's all you needed to do. Now the rules have changed. Now you've got to file something called a BOI report, Beneficial Ownership Information Report, to the federal government, to this agency called FinCEN. This is a new law. It went into effect January 1st, 2024. Now we're going to go through the BOI report right here. We're going to do one right here on the show today. But before we get there, I want to talk about who does this apply to? What are the exceptions? There are some exceptions. What is what's called a company applicant, which is who files? Who has to be listed on this application for each LLC or corporation? And then we'll get into some of the different exceptions and some nuances you might need to know. We're definitely going to be taking your questions here. And that's the format for today. Now, if you have questions not related to this topic, don't worry, we'll get to those at the end here. But I want to stay focused today on BOI because, guys, you have to comply with this. Now, there are some cases. There's a case in Alabama where a court has ruled this unconstitutional. That case only applies to the individual plaintiffs in that case or people that were part of that association. It's very narrow. Now, what this law is about is this law, the whole purpose of this was to say, hey, we want to combat terrorism as a federal government. We want to combat money laundering. And we're going to pass this law because we think people are using LLCs and corporations illegally to launder money and to encourage or support terrorism. Now, what's happening is they're making everybody have to now file this beneficial ownership information report to FinCEN. FinCEN is a division of the Department of Treasury that has to deal with financial crimes. It's a whole regulatory group that connects with state law enforcement, federal law enforcement, but they're the ones getting this information that you have to file for your LLC. That's right, your LLC for your rental property, your small business S corporation. That's right, you have to file this because of the federal government's concern over money laundering and they're trying to combat terrorism. Now, I think this law is a bunch of BS. I'm just going to be honest. If I was in Congress on this, I would have voted no for this. Why? Because they already have this information. The federal government doesn't need this. They already have this information. And the people that are laundering money and doing illegal things aren't going to file it. Or they're going to file some BS report instead that's actually not accurate. I just don't see how this is going to really move the needle in combating terrorism or money laundering. My personal opinion. But what is it going to do? It's going to have this administrative burden requirement on everybody that now has to file this damn thing. But you need to comply. It's not the end of the world. That's why I'm here. We're going to work through it. It's not rocket science. You can do it. There's also companies. We have a business, Main Street Business Services. My law firm partner, Mark, and I have a company compliance business that supports 10,000 plus LLCs and corporations across the U.S. We file these for our clients. Like, we take care of this for you. You need it updated? We take care of it too. So you can get over to Main Street Business Services and we can take care of it for you as part of our services there. All right, let's get into who has to file this. You are what's called a reporting company and must file this BOI report if you are an entity, LLC, corporation. This is whether you're a C Corp or S corporation, any statutory trust, pretty much anything where you file the document with the state to get some type of legal status. Now, the federal government estimates already this is 32 million entities that are already in existence before 2024. 32 million entities that are going to now need to file and comply with this law. That's probably you listening here if you have an LLC or corporation. You are what's called a reporting company, and you are going to now need to file this BOI report. Again, we're going to get into the report, who needs to be on it. I'm going to get to that detail here, but I first want to make sure you understand who's got to file. Now, if you're a reporting company, this is going to go to FinCEN. Now, this is private information. FinCEN cannot use this information and give it out to the public. It's not publicly searchable. FinCEN, the federal government agency, can share it with other federal law enforcement or state law enforcement if there's a subpoena or a court order. But otherwise, this is protected information. The federal government cannot disclose this or provide this information anywhere else. All right, now there are some exemptions. There are 23 exemptions to whether you need to file. Most of those exemptions don't apply to anyone. I have, in all the consults we've done, and we filed thousands of these already, by the way, on behalf of our clients. There are only 2 exemptions that really matter. The 2 big exemptions that you need to have on your radar are the large company exception and the inactive exception. Okay, those are the 2 exceptions I want you to be thinking about. The large company exception says, hey, if you have 20 employees and 5 million or more of revenue on a federal company tax return that you filed to the IRS, you don't need to file this. So for example, our law firm, KQS Lawyers, has more than 5 million of revenue, more than 20 employees, not going to need to file. Directed IRA, directed trust company, our retirement account company, more than 20 employees, more than 5 million of revenue, doesn't need to file. Those companies can rely on the on the large company exception because they're large enough. Now this sucks because small business is the one really having to comply with this. All the big companies don't need to worry about this. They don't need to worry about this at all. They got 20 employees or more and 5 million in sales of revenue on a federally filed return. They don't even file anything. So this is really hitting the smaller entities that don't have the employees or the revenue that need to file. Now there's some subsidiary exceptions too. A subsidiary of a large company doesn't need to file either. I'm going to get to that. We're going to do some diagramming here. But the second exception I want to hit is called the inactive exception. This exception applies if you have an entity set up before 2020. So let's say you set up an LLC in 2019 and you never ended up using it, but it's just sitting around and you haven't used it, but it still exists. Do I need to file a BOI report? No, because it's inactive. I'm not using it for any transactions or business. It doesn't hold assets. There's no revenue going through it. And it was set up before 2020. No BOI report is required. But let's say in 2022, you set up an entity and again, you haven't used it, or maybe you used it for a little bit and you haven't been using it at all. Well, you need to file. Even though that entity is inactive, it was inactive after 2020. So the only way you get to use that inactive exception is for entities set up before 2020. So 2019 and before. So if they're now inactive, don't worry about a BOI. You don't even need to file. But anything after 2020, even if it's inactive now, you still have to file this BOI report. Okay, now I want to break down some of the tricky parts of the exceptions and whether you're a reporting company. And let's share the screen here. I just want to show you guys how this works for the large company exception here. So let's take a common structure that we have. Okay, let's say you have an LLC that's a partnership entity. Okay. And let's say that you have 20 employees plus employees here, and you have 5 million or more of sales and revenue, 5 million plus of revenue. Okay. 20 plus employees. Now let's say that LLC has another single member LLC that it owns 100%. And let's say this is a clothing company here. Okay. Let's say over here, you've got a little shoe company that you're like, well, we got a little division. We spun out a little entity that sells shoes. Okay. All right, cool. Now, if this entity is exempt because it has 20 plus employees and 5 million of revenue, this one's exempt. Okay. So I got the exemption here and I got the exemption here because it's a subsidiary. It's wholly owned by an exempt entity. This is a large company under the rules, 5 million revenue, 20 plus employees. But let's say this LLC is owned by 2 people's S corporations. Okay. By the way, Mark and I, our law firm is owned like this. I have my S corp. Mark has his S corp. We each own the LLC 50%. This has 5 million in its own revenue, 20 plus employees. But this S corp down here for Mark, is my law firm partner, by the way. He's going to have to file a BOI. My S Corp over here, even though I might have 5 million or more in revenue because it's coming through different entities I own, I don't have 20 or more employees down here. And so when you think of any underlying entity, you only go kind of like if you have the large company exception, subsidiaries get the exception, but holding companies don't. Okay, so we've seen a lot of large companies that are like, hey, we have kind of our main LLC or corporation that's the big company, and we have a holding company structure, and then it's an individual that owns it. And this has 5 million of revenue and 20 plus employees. Well, exempt here, not exempt here. Okay. So holding companies will have to file in this scenario here, the BOI report. Now, again, if it owns a company 100%, the subsidiary is exempt. So we got exempt and we've got exempt. All right. So now this gets into the weeds a little bit here, but I think it's really that's really it for exceptions. I mean, that's all you got to know. So no more to whiteboard. You don't need to know any more about that. That's it. Large company, subsidiaries to the large company, but not the holding companies, just subsidiaries that are 100% owned. And then any inactive entity, which doesn't have 1,000 or more of transactions in the last 12 months that was established before 2020. All right. Everyone else has to file. Now, maybe you're some federally registered, like a bank or a registered investment advisor, where you already filed this to some other government agency. There are some exemptions for that, but that's it. And 99% of our clients, those things don't match up. But if you do have some federal license where you are filing your ownership to the federal government in some other way, that's the other 21 exemptions on the list. All right. Okay. So you've got to file. What do I got to put on the filing? Well, we got to include anyone who is a 25% or more beneficial owner or has substantial control. So the BOI is going to have this list of information on it, and we're going to go through one here in a second so you actually see what's on the filing. But the BOI is going to include, obviously, the name of the company and its tax ID or employer identification number. But the two main areas of information of what you're going to have to gather for this is anyone who owns 25% or more of the company, or anyone who has substantial control. Okay. So let's say you have a corporation, and let's say that there's 3 people who each own 1/3 of that corporation. And let's say they have a president and a CFO of that company. All right. And that's really all the officers, and there's just 3 owners. They each own 1/3. Okay. Well, they're all 25% or more. So all 3 owners are going to have to be on the BOI, and the person who's the president's on the BOI, and the CFO would have to be on the BOI. Let's say that they have a board of directors. Typically, the board members would also have to be on the BOI. Okay. Now, the 25% or more ownership, let's talk about that more. Okay. Some of the common questions here on 25% or more are about trusts. Matt, what if I own my LLC through my trust? So who do I list on that filing? Well, we're going to still list the underlying owner of the trust. So if you have your trust for estate planning, and let's say you have this structure here where you've got your LLC owned 100% by your trust. This is your revocable living trust for estate planning, very common. And this could be your business, or it could be a rental property LLC, doesn't matter. And then this is you down here that own the trust. And maybe you're married, so you got a spouse here. Now, let's say you're the manager of the LLC. This is very common structure here. Okay, we set up almost 500 entities a month in our law firm for clients doing this. And maybe it's an S Corp, maybe it's an LLC, kind of depends on your business. But a lot of times there's not all these shareholders and investors. It's just a small business. It's closely held by an individual person, or maybe a married couple, or maybe a business partner. But let's say you do have a trust. Well, who do I list? Well, FinCEN has already came out and said, don't list the trust. We want to know who is the trustee and who is the beneficiary of the trust right now. Now, if you have a trust for estate planning, you're generally your own trustee during your lifetime. Maybe you and your spouse if you have one. Also, during your lifetime, you're the beneficiary. You get the income from it and all the benefits of it during your lifetime. When you die, you've probably listed successor beneficiaries who get your assets upon your passing. But during your lifetime, you're the beneficiary. So who's listed on the BOI here? You and your spouse, because you're the beneficiaries and the trustee. Who's the manager? Maybe that's you. That's it. So now I've got you and your spouse listed on the LLC. So remember, for you that are trusts, we're going to look at who's the trustee and who's the beneficiary. All right. Now I get this question too a lot. Well, Matt, what if I've got an LLC and it's just me? I'm the manager. I'm the 100% owner. I'm the only one on it. But I live in California or some other state that's a community property state. So by law, my spouse owns 50%. Do I need to include them on the BOI? No. Okay. That's a legal principle where they do have an equitable ownership, but for reporting purposes, you can just list yourself because you are the owner of 25% or more. And of course, you're the manager, so you're getting listed twice. But you just need to list yourself. Your spouse wouldn't need to be on there. So don't worry about chasing down spouses if you're in these community property states. The only thing we need to chase is the actual person who owns 25% or more, and we got to get to the underlying ownership. So again, if it's a trust, we're going to look down who owns the trust or is trustee of the trust. Let's talk about substantial control though, okay? The 25% or more is pretty easy. And by the way, that's 25% or more of the voting rights or the profit interests, okay? So either or, they still need to be listed. All right, substantial control is the other person that has to be listed on this. Now, FinCEN has already came out and said someone who substantial control means anyone who exerts substantial influence on the company. Well, sometimes the person at the register, at a fast food restaurant thinks they, exert substantial influence on the business. That's not very helpful to me, at least. Like, what does that mean? So they have listed some specific job titles that we know would constitute this, at least in the eyes of FinCEN and the federal government. Any C-suite executive, CEO, COO, CFO, or chief legal officer or general counsel. These are positions that FinCEN has already said, if you have any of these positions, we think that they exert substantial influence, so they need to be listed as someone on the BOI filing. Next, they've said board members. Now, a lot of you that have corporations, you have to have a board of directors for your corporation. It's required by law that you have it, and you probably listed them when you filed your articles with the state. Those board members should also be on your BOI filing. All right. Now I'm going to get to what information you need from these people next, but any of these board members need to be on there. Now, some of you have done a board of advisors for LLCs, and some of you have done them for corporations too. A board of advisors did not need to be listed. Board of advisors, they don't have substantial influence. They're not in any control position. Board of advisors just have an advisory purpose. Technically, the board of directors has the ability to fire and remove and appoint officers. So the board of directors could, in a corporation, could remove the CEO. And that is a substantial control type thing. So board of directors in a corporation should be listed. But if you have a board of advisors for your LLCs, or even some, you might have them for your corporation, don't worry about listing those, okay? They don't have any oh my gosh. Substantial. Okay. I don't know if someone's already commented on that on the chat, but trying to move fast here, guys. I'm multitasking. All right. So that's who you need to think of. For your LLCs, if you're a manager of an LLC, you're going to need to be listed here as a substantial control person. So think of it as really like key executive or officers, the big decision makers in any business. Those are ones that need to be listed on the BOI filing. All right. Okay, so we know who's the reporting company and who has to file. There are some exemptions. The large company and the inactive are the most common. We've talked about who needs to be listed on the BOI filing. Anyone who owns a company 25% or more, or someone who exerts substantial control on the company. But what do they need to report? Okay, so what you need to report from each person is their name, their address in the US. You have to provide a photo ID of them. This could be a passport, or it could be a state-issued driver's license or some other issued state ID, and it has to be valid. It cannot be expired. And then you have to list that number, the passport number or the driver's license number, and date of birth. Now, what's not on here that's actually surprising? Social Security number. You do not have to list the Social Security number of the individuals here, which I thought was interesting. I'm like, why wouldn't they just get that? That sounded like the easiest, but they didn't want that. So in the law, it specifically said name, address, a government issued ID, and their date of birth. Okay. So you're not getting the Social Security number of any of these individual people. All right. So that's the information you're going to need to gather for anyone in order to file the BOI report. So you know you need to file it because you didn't have an exception that was met. We've determined who needs to be listed here. Anyone 25% or more owner that exerts substantial control. You know the info you got to grab: name, address, date of birth, and then we need the photo ID, including the number on the photo ID, the driver's license or passport ID number. And that's the information that's going to now go on to this BOI report. Now, in terms of filing, the requirements and deadlines, if you are an existing entity before January 1 of 2024, when this law went into effect, so if you had an entity set up in 2023 or 2017 or whenever, the entity existed before January 1st, 2024, you have until December 31, 2024. So any pre-existing entities before 2024, you have until the end of 2024 to file and become compliant. Any entity after, really on Jan 1 or after 2024, you have 90 days. This is for this year only. In 2025, it goes down to 30 days to file. But for the first year, and we're already filing entities. We've already set up hundreds of entities for clients, over 1,000 entities already this year for clients in January, February, March. They've already had to file their BOI. Their deadline is already hit. And we've already had to file a ton of these on behalf of clients because they only had 90 days. Now, we've been filing them a lot. And again, this is Main Street Business Services, is our company where we do company compliance and do these filings for clients. Our law firm does them when we set up any new entity to make sure you're compliant right out of the gate. But already on these ones here, we filed a ton, but technically the deadline is not until the end of the year. So don't wait forever, though. Don't be like filing your tax return at the deadline either, or filing this thing. But you do have until December 31st, 2024. Again, if your entity existed before January 21st, 2024. All right. Did you have a question over there, Tristan?
Yeah. Eduardo from YouTube wants to know, what if the person does not live in the U.S.?
What if the person does not live in the U.S.? You can use a foreign ID, government issued ID, to identify them. Foreign individuals can own LLCs or corporations, so you could list that. You do need to give some type of U.S. address, though, and it can't be a PO box. So this is one I've kind of struggled for finding a clear-cut answer, and I think is one that's kind of like pending a clear, well, what do I list? Because we do have some people where it's like, I don't have a U.S. address. Well, where can you receive mail or notice or stuff like that in the U.S. is kind of like the best answer I've heard so far. So I don't know. If anybody has seen any guidance on that, please throw it in the chat on the address part of it. But foreign ID can work. All right. Now, here's another thing, okay? One more thing you got to know. there's something that needs to be on the BOI called the company applicant. Company applicant. The company applicant is the person who files the BOI. And what they're going to say is, hey, I was the person that set up this LLC or corporation. Now, if you did it yourself, you filed this entity yourself, then you are the company applicant, and you're going to be on the BOI anyways, as one of the 25% or more owners, you know what I mean? Or the person with substantial control. However, if you used LegalZoom or whatever, some online entity, they're going to be the company applicant. Also, if you use a law firm like us, we're the company applicant, and that's the actual individual paralegal or lawyer, and actually it's both, if they're both involved, that are listed as the company applicant on the FinCEN BOI filing. So, so you need to know who's setting up that entity. Now, the company applicant is only required on Jan 1, 2024 or later entities. So if you have this entity from 2022, this LLC you set up, or 2016, your S corporation, and now you're having to file BOI for the first time because this law didn't exist until 2024, you don't have to list the company applicant, okay? However, moving forward, on all entities, Jan 1, 2024 moving forward, the company applicant must be listed, all right? So that's the only other item. We're going to get all the information of the LLC, the name of it, the state where it's set up, the tax ID identification number, someone who owns 25% or more, someone who has substantial control, and then for new entities, Jan 1, 2024 or later, the company applicant has to be listed, all right? But again, if this was an existing entity before 2024, don't worry about listing the company applicant. You get to skip that in the BOI filing. That's it. That is the exhaustive list here on what's required in terms of filing this BOI report. Now I just kind of want to go to the form and walk you through what to put in some of the common questions we see.
Just a quick clarification from Lourdes here.
Yeah.
So if she closed her business at the end of 2023, she doesn't need to file BOI.
Okay, great question. If you dissolved an entity before 2024, don't even worry about this. The entity doesn't exist anymore. You do not have a requirement to file the BOI report because it no longer exists. Now, there are some questions about, do I need to file it if I dissolve in 2024? This is another one of those pending areas where FinCEN hasn't issued guidance. Our sense of it is if we dissolve your entity, which we've dissolved a lot of entities last year and this year already for clients clearing out entities they don't use anymore, that they don't want to have to do this BOI filing now. And by the way, when any of your information changes for your entity, the name changes, the address of the company changes, the individual information changes, the ownership or their addresses, you have to update your BOI report. So you've got to amend it too within 30 days after anything changes. Because people don't want to have to comply with this, right? They have entities they're not using, dissolve them and get rid of them. We're doing that every day at our law firm, KQS Lawyers. We're shutting down entities clients aren't using, trying to clean things up right now. Because now this is something that really matters. This is a thing you got to file. There's criminal penalties if you don't comply with this thing. There's like seriously jail time for non-compliance on this, $500 a day penalty for non-compliance. It's nasty. You do not want to avoid filing this. But any of those entities you're not using, let's get rid of them. Dissolve them. What are they doing? You don't need them. By the way, from an asset protection standpoint, if you have an LLC that you don't use anymore, but back in 2020, something happened on a rental property and the LLC was in good standing in 2020, you still get the asset protection, even though in 2024 you dissolved it. So it's not like you need to keep that entity open forever to get the asset protection. Just close it out if you're not using it anymore. Get rid of it. And that'll prevent you from having to file BOI. Now, the pending question is kind of like, what if I dissolve it now in 2024 before the December 31st, 2024 deadline? Do I get out of BOI? My sense is yes, because the deadline never hit. So you didn't have a filing requirement until the deadline. But there's differences of opinion on that. Again, this is an issue FinCEN hasn't given clear guidance on yet. All right, any other pending questions here? Okay, not on topic. All right. Any of you got questions on anything else? We'll have a minute here to, more than a minute. We'll have some time here at the end. All right, let's jump and let's just go through the form. By the way, you get to this form by going to fincen.gov and then you'll go to BOI Report. Now, our team does this for you. When you set up an entity with us at KQS Lawyers, we do this for you when we set up a new entity. Anybody that is setting up entities, new LLCs or corporations, you've got to do this. You have 90 days to get this filing done on any new entity. But you also have to maintain it. Remember, if anything changes, you got to amend it. For you business owners, I'm going to show you kind of how this works, but you do not need to do this. How many of you do your tax returns? If you're a successful business owner, you should not be doing them. Just like this. Let your professionals handle it. Let the lawyers handle up the entities, set up the entities for you. For those that have existing entities, or you have multiple entities, we have our Main Street Business Services, company compliance service, or use someone else. I'm not saying you have to use us. Outsource this is what I'm saying. Go do more of your business than what you're good at. I don't care what it is. Like, your time should not be spent doing this, but I want you to understand the rules and how this works, because this is now reality of what you need to get done. Okay, so here's the filing information. You gone to fincen.gov, clicked on BOI ownership information report filing. Now, this is just what you're going to start putting in. There's 5 sections to this, as you can see here on the screen. Okay, I got 5 sections here up at the top: filing information, reporting company, company applicant, beneficial owner, and then you submit. That's it. Okay. The filing information, you're basically going to be putting in information on this. This is a new report, or is this an updated and I'm correcting it? Okay. Then that's it. Okay. You're consenting to get some stuff here. Then you get to the reporting company information. Okay. Has this company received an ID before? Or is it a pool investment vehicle? You're typically going to be skipping those, but then you're going to list the company name. For example, one of our companies is Directed Trust Company. That's the actual legal name. It has a DBA of Directed IRA. That would be listed down here. Okay. So if any of you use DBAs, you're going to be inserting those in box 6 there. Now, you list the tax ID for the entity. This is also sometimes called your employer identification number, tax identification number, same thing. The state the entity was set up, the address of the entity, then you're moving on to the next thing. Now you've got to start putting in information about the company applicant. And this is where I said, if this was an existing entity before 2024, you're going here and you skip this. Okay, so any of you that had entities before 2024, company applicant's not required, remember? And so FinCEN doesn't even want that information. But if you just set up in February, let's say, you need to list who the company applicant is. So that information needs to be listed here. Now, again, you should be using professionals that actually do this for you. So they would have already done this. You don't have to do this. You should not be doing this. If you're a business owner, someone with an LLC or corporation, this is not your job. If whoever set your entity up isn't taking care of this stuff or doing it for you, you got the wrong professionals. Now, you can do it on your own. I mean, if you were setting up your entities on your own, and you know, like, I don't know, maybe I don't change my own oil in my car. Okay. I could, but I don't. I'm going to focus on what I do. Okay, so let's list the beneficial owners. Okay, now this is where the meat is listed here. Now we're listing all the people who are beneficial owners. And you're listing cases, the number, first person, you know, you're going to start listing beneficial owner number 1. And now there are some questions here. By the way, if there's not a box that's marked red here, you can just skip it. So just get down here, start entering in the individual's name. Couple notes here. On some exceptions that I didn't mention earlier. Minors, if you have and we have a lot of, you know, family businesses where the kids might even have some ownership, minors do not need to be listed. If they're under the age of 18, they actually do not need to be listed, even if they have an ownership stake in the company, or they might be an officer or maybe even on the board of directors. Okay. They do not need to be listed though on the BOI report, as long as their guardian is listed elsewhere. Okay. So you can skip minors and just list the guardian. All right, so we're putting in the legal name, date of birth, address. Remember, this is all the stuff we had. This is the ID, and this is where you got to update the actual picture of the passport or the driver's license. But you're going to indicate what this is, right? This, what type of identifying document is this? This is where you're going to list passport or driver's license. If you filled out the stuff above, that populates. Okay. All right. And then you just keep adding if there's multiple beneficial owners. Add. If there's, you know, you got 2 owners and you got someone else who's an officer you need to list that wasn't already listed, then you might have 3 of these listed. Okay. Now you've disclosed all the people who are beneficial owners. Then you frankly just go to submit, list the email here. And by the way, you're going to get a confirmation of filing if you've done this. Your professional should be keeping this. They're doing this on behalf, so you have evidence of your filing here. We do that, of course, at our law firm. We're going to keep this information for you. And then at Main Street Business Services, again, where we're doing company compliance, or any of you that have some third party that might maintain your entities for you, they should be keeping records of this stuff for you. Obviously, your renewal with your state, your annual minutes. When you change stuff on your company, you need to amend this filing. And that's going to come back here to a corrected report or an updated report. All right. So depending on what's happening, you might be coming back into an amended report if any stuff changes in your entity. We've already had to do that for some clients that have had changes of ownership or stuff from their initial filing. All right. So that's it. I mean, that's the BOI report. Now, remember, this is privately held with the federal government. They can only share it with other federal law enforcement agencies or state government agencies, law enforcement agencies with a subpoena or court order. This is not publicly searchable. Now, I have had some scenarios that I've ran into where I've had some people who are like, hey, one of our, someone had an owner in their business that owned 25% or more, and they're kind of not in a good spot with this other partner, and they were refusing to provide this information. And they're like, we can't file a complete report. What do we do? Well, you file what you have. If you have somebody that's refusing to give their information, but they need to be listed in here as a beneficial owner, either because they have 25% or more ownership, or they have some type of substantial control in the business, but they're refusing to provide this, you would still file as the company, disclose all the people who had, and that's the person who will go get any penalties for failure to comply. Okay, so don't hold up the whole report and not file anything because it's incomplete of that one person. All right. So, and we're going to see I don't know if they're going to give options to like note that when you file it. Currently, there's not, but we still want to file something and get that on record and make sure you have some clear communication, whether it's emails or letters to that person who wasn't listed, that you require their information so that you can file this and they need to provide it ASAP, which you would update if you do actually get it from them. Now, hopefully you don't have that scenario where you have to chase that down, but that is another odd little scenario we've ran into as well. All right. Any pending questions on BOI, FinCEN, any of these filing requirements? Okay. This is going to be, like I said, we've already filed thousands of these on behalf of clients. It's not the end of the world. It is just one more freaking step I know small business owners and investors have to comply with. I wish it didn't exist. Trust me, I would have voted against this. I hope the Supreme Court rules it unconstitutional, but I don't think it's likely. The 2 cases pending right now in Alabama and Maine, the Alabama case, the district court has already ruled on it and ruled the Corporate Transparency Act unconstitutional, only for those individuals involved in that case, though. Everyone else, you still got to comply. But we'll see that's going to work its way through the Court of Appeals and possibly up to the U.S. Supreme Court. But you can't wait for that. You can't not comply and just hope that the Supreme Court strikes this down as unconstitutional. I think it's unlikely that they will, because I think the federal government has enough interest in money laundering and terrorism type stuff, which was the purpose of this bill in the first place, where they can state some legitimate federal purpose. That's how the Alabama court struck it down, by the way, is they said there was no federal purpose for this. Entities are state-created entities, whether it's an LLC or corporation. The federal government has no interest in legislating or requiring information to be filed with them about these entities. Again, I just think the law enforcement, the terrorism and money laundering argument is likely going to prevail. All right, so that's it for BOI and FinCEN. We're here to help if you need it. Do not put this off. Whatever professionals you're using, make sure you're reaching out to them. All the good law firms and corporate compliance companies are out there helping on this. Let us be a resource for you. We're super affordable. We do company compliance for $200 a year. We do your renewal for you at the state. We do your annual minutes. We do your BOI filing. We'll do any amendments to your BOI filing. It's all included for just $200 a year. You don't have to worry about that stuff, making sure it's getting filed properly and your entity's actually in good standing. We do it for you. That's at our company, Main Street Business Services. So get over there, book a call if you need any of those services. We're happy to help you. And if not us, Get some service, get some process. Maybe you have a bigger organization where there's someone on your team that can do this to make sure it gets done now and is, of course, updated year to year as any changes might happen to your company. The biggest change, by the way, we've seen is just an owner's address change or some officer's address changes that's listed. You got to file an amendment. Okay. I know it's kind of crazy, but you got to still update that and amend that information. All right. What other questions we got, Tristan? They don't have to be on BOI or FinCEN.
Yeah, we got a couple random ones.
I'm a little tired of the FinCEN stuff anyways.
Oh, yeah. And guys, the reason Matt can't change his oil in his car is not because he can't. It's because he doesn't have any.
That's true. I bought an electric car. Okay. So I've got the Audi e-tron GT, by the way. Awesome car. And my wife has a Tesla. I don't know. I'm not like a huge electric car person. I just liked them. And they don't have oil. That's a good point.
Beautiful car, though. All right. This is from Lourdes. I was wondering if you were supposed to get a tax ID for a trust to be able to be assigned as an S corp.
So no.
So the trust is the one appearing as the owner of the S corp.
So don't list the trust. You won't even list the trust. So if you have a trust for like your revocable living trust or your family trust, the trust isn't listed at all. You just immediately list the beneficial owner of the trust, which is you, if it's your trust. So you list the trustees and the current beneficiaries of the trust. So like the most common is going to be like an individual that has a trust and they're the beneficiary, or like an individual and their spouse who are trustees and they're the current beneficiaries of their trust. You just skip the trust at all. The only trust that you will list on the BOI is a irrevocable trust. We don't love irrevocable trusts. If you're someone that has an irrevocable trust, you should be talking to your lawyer about your BOI because your whole tax and legal life is much more complicated. Irrevocable trusts are very high net worth strategies that we do them in certain situations. But the typical trust out there, your irrevocable trust or your family trust for estate planning purposes, it doesn't even get listed. You just skip it and you say, well, who's the trustee and the individual owners? That's who gets listed. Great question, though.
All right. This one's from Randall. This is a BOI question. Matt, what can you tell us about the individual states adopting BOI reports in addition to the Fed?
So every state has a little different thing that they require on an annual basis. Like, for example, California has a statement of information you got to file on your entity the first year and every year after. Most states have like an updated annual filing you got to file for your LLC or corporation to say, hey, we're still here, we're still in business, and here's our $50 or $100. California's $800. You pay the franchise tax board, but most states are $50, $100. Arizona, for example, I'll just give you some nuance to this, is a weird one in that LLCs have no filing requirement to the state of Arizona. So you don't have to update Arizona on anything year to year, even to say, hey, we're still here in business. They're like, as long as you don't tell us you're in business, you're in business. Corporations, though, in Arizona, you have to file something every year. So in Arizona, it depends on whether you're an LLC or you're a corporation. So, but most states plan on you have to file something to the state every year to stay active. And there is a nominal fee, $50, $100 to stay active in that state. Now, some states like Wyoming's a very popular state where you don't have to list the beneficial owners actually on the filing. You only have to list the managers. So that's still the case. And there's still even a way you can skip the managers and do an authorized person, which we do for certain clients that want privacy in Wyoming. And you can still even do that on your renewal, but there's no way around this BOI filing. The one thing that's unique on the states, though, when you're filing your LLC or corporation to the state, that's typically searchable. Like that's public information of whatever's on the forms you file to the state. And so people can see that. So if your state requires you to list the members of an LLC, which are the owners, or anyone who owns a certain percentage of a corporation, some states make you list anyone that owns 20 or 25% or more, like on the filing to the state. Not all states do, but some do. So in those states, that's publicly information available. The FinCEN, the BOI filing is different though, is that's not searchable. No one can get to this FinCEN BOI database unless they're federal law enforcement or they're a state law enforcement agency that gets a subpoena or a court order to get access to it. So, so you can feel at least somewhat good about this not being publicly available. I know the IRS did lose some people's tax returns, some billionaires' tax returns got lost and disclosed, but otherwise it's supposed, by law, it's supposed to be kept private.
Awesome. This one's from Bevo. In regard to crypto mining, you mentioned in a previous video that you needed about $100,000 in order to make sense of setting up LLCs for crypto mining. What would you say a good threshold is for owning crypto directly in a self-directed IRA?
The threshold for crypto, just owning crypto in an IRA, I mean, it could be 1,000. I don't know. It depends on the crypto you're buying and what you think, how it's going to grow over time. Our annual account fee at directed IRA for a crypto IRA is $395. Actually, sorry. Yeah. So, well, let me say this. Plan on about $400 to $500 in annual fees. Okay. Whether you're buying or selling, maybe if you're just holding for a long period, you might be in a $300 to $400 range. So there's a cost to having the crypto IRA account. The mining is just the reason the 100K on the mining, and I don't know that it has to be 100K, but one thing with the mining is you need an LLC, you need to do the blocker corporation because you have mining income now. That's a federal tax return. It's going to cost you thousands of dollars every year just to maintain that, versus the crypto IRA is a few $100 a year. So it's a lot lower threshold. Now, if you have some crypto that you think you can buy for 1,000 that'll be worth 100,000, I think that's unlikely, but maybe, I don't know. I mean, I don't know. Then it would be worth it, because that, especially doing it in a Roth, because that would be all tax free. But so it kind of depends. We have lots of crypto clients that have just done $5,000. I mean, we have clients that have done $2,000 in covered ESA accounts, just buying crypto, because they believe the crypto is going to exponentially grow in value. So, but you got to, of course, weigh that against the account fees too, of course.
Awesome. All right. Next question. Matt, is it possible to have a solo 401k if I have a W-2 from my S Corp and I also work 1099 with a dental office separate from my own dental office S Corp?
Absolutely. You can have a solo 401k. Great question, because you don't have other employees anywhere in that scenario. You have your own business with no employees, your own S corporation. Great. Let's do the solo K there. Now, you say you have a 1099 for working for another dentist. I would just have them 1099 your S corporation directly, so that any income you're getting in your S corporation and that 1099 goes right into that same S corp, which could have the solo 401k, because you're not an employee to other dentists, which even if you were would be fine. But the issue with the solo K is the solo K is for any business owner that has no other employees that they employ. So as long as you don't have any employees in your corporation or LLC, you can do the solo 401k. So the purpose of the solo 401k, solo is meant for people who are self-employed that don't have any employees themselves. So the government's like, well, you don't need to do the whole blown 401k where you offer it to all your employees and there's all this matching and there's all these testing rules of how much you can put in your 401k versus an employee. They're like, it's just you. There's no employees to worry about. So they've carved out this easy solo 401k because they know there's no other employees. Now, you could have partners and spouses and still do a solo K. By the way, for anybody that doesn't know what a solo 401k is, this is like the #1 retirement account for self-employed people. The solopreneurs, we got the gig economy now. We have so many clients that do solo 401ks because you can put $69,000 a year in. A lot of people are like, Matt, and I've heard this so many times, Matt, I'm self-employed. I didn't work for a company that set up a 401k for me. They didn't do a match for me. I'm a real estate agent. I've been a consultant. I've had to make my own income, and I love being self-employed, but I've sucked at providing a retirement account because there's an IRA. I could put $6,000, $7,000 a year in, and I just wasn't that excited about it. I'm like, no, there's a solo 401k, $69,000 a year you could put into it in contributions, and you don't have to worry about other employees. So great option. I got some other videos and podcast episodes. We should probably do a live even on the solo K alone, because it's super popular for self-employed people. If you've heard of like a SEP IRA, which is the old school solo 401k, This is even way better. Just do the solo K. Don't even think SEP IRAs either.
All right, Matt. This is a question from Eduardo on YouTube. Are DBAs for sole props required to fill out the BOI report?
Okay, great question. It's a little tricky because the language on who is a reporting company and must file a BOI is anyone who files a document with the state. And when you apply to get a DBA, sometimes it's called a fictitious name or a trade name. You do not have to file a BOI. So let's say that you're just self-employed and you just file on Schedule C. You don't have an LLC, you don't have a corporation, but you got a DBA name to do business under. Even though that could have gone to a state, some states do it at the county level, some states do it at the actual state level. You do not have to file the BOI on a DBA. Good question.
All right. And then last one, what are your fees?
Okay. Depends. I mean, in our law firm, by the way, we set up entities for depending on what you need and how much consulting, from anywhere to $1,200 to $1,700, around there, where we're doing tax planning at it. We're looking at your whole situation and doing the entity, incorporating asset protection, tax planning, and making sure your administrative burdens are low too. And that includes the BOI filing, by the way, any new entity you're doing in our law firm at KQS Lawyers. Now, our BOI service, where we're just like, hey, any of you existing business owners, you've got all these entities out there, you know you've got to do these BOIs, your accountant's not going to do it for you, you don't want to do it, you just go make money in your business doing something else. We handle BOI filings, and like I said, annual renewals, annual minutes at our company, Main Street Business Services. This is a business Mark and I set up. We took a lot of we had 10,000 plus clients in our law firm that were on this service, and we set up as a separate company to just do company compliance, just do stuff like this for our small business owner clients, where we knew their time was better spent running their business than taking care of little compliance crap like this. But we also knew they didn't need a lawyer. We didn't need them lawyers that bill $500, $600 an hour to go help them on this. So we have a great team of compliance professionals that are experienced, that know this stuff, that'll track it for you. Like I said, it includes your state renewal. It includes your BOI filing, your initial one, and any amendments that need to be filed. And it includes your annual minutes. That's called our company compliance service. $200 a year per entity. Pretty sweet. So you can get over to Main Street Business Services. We should drop a link in there too to book a call. Brady's one of our #1 sales guys, and Brigham, Alex, there's a whole team there that can help you on that. So, but this is a big deal. And Mark, we're going to be talking more and more about this because we know what's happening. I've already seen it in my conversation with clients and just in the flow of what's happening right now. You guys are waiting until the end. I know you guys that are listening, they have these LLCs and corporations, are like, I'll worry about this in November or December. Oh, really? Don't you want to be enjoying the holidays and doing all your last minute tax planning? And maybe fourth quarter is the busiest quarter in your business and you want to focus on making money. Let's get this crap done now. Don't put it off. It's not that complicated. Just engage us or get it done on your own or work with a company that's doing this stuff. I just want you to get it taken care of because this requirement's not going away. I know there's the cases out there, and I know some of you might be like hoping that those cases prevail, and that's me. I'm hoping that those cases win and that it's struck down as unconstitutional. I just don't think it's going to happen, or it's going to be too late, and we're going to be in this weird situation of I should have filed, but I didn't, and now it's just going to be a mess. So our message to everyone now is just get compliant, get it taken care of. This is the information you need to gather that I kind of went through today, so you know whether you need to file or not, and if you do, what needs to be on your actual BOI report for your entities. So thanks everyone for tuning in today. I greatly appreciate all the questions, especially all those ones that were on topic. I loved all that on topic. We'll be back next week, of course, here. Make sure you're subscribed to the YouTube channel. We'll be giving notices there. All my other content's coming out here on YouTube as well, so please get over to the YouTube channel if you're not subscribed there already, and we'll see you next week.